Hey guys, what's going on? It's Denise Donahue, your favorite mortgage nerd, and I get this question all the time. What does owning a home really do for me financially? Like everybody says it's a good financial decision, but I want to see the numbers, which you guys know I'm a nerd, so I love dissecting numbers, and that is what this video is going to do for you. So, there's two big components that owning a home can do for you. The first one is part of your mortgage payment is goes towards something called principal. And that's to lower your loan balance so that when you go to sell, you have more equity in the home. That principal portion of your mortgage payment is oftentimes what we call your forced savings account when owning a home. The bank takes that money, they put it into the loan balance, and when you go to sell the house, you kind of get that money back. So you have the principal portion of your payment and you have what the house is appreciating. So if you buy a house today worth $100 and you sell it for $200, the house appreciated that $100. I'm going to show you a real example. This first example is going to be what your principal portion of the payment looks like. So this is an amortization calculator, which sounds really fancy, but it basically just shows you the schedule of how much of your payment is going towards principal and how much of it is going towards interest, which changes literally every single month. So this is a $350,000 loan at a 4% interest rate. It's a 30-year mortgage, 12 payments a year. You're not making any additional payments. Your principal and interest payment you'll find here at 1,670. And at the end of 5 years, you would have paid a total of 33,000 into the principal of your mortgage loan. But if you see here, I've highlighted, this is what an amortization schedule looks like. Your first payment, you would have $504 going towards principal and $1,166, which goes towards interest. That interest is still tax deductible, but I'm not even going to get into the tax part of this. Then you'll see that your second mortgage payment, you have a little bit more going towards principal at 505. Your third one, a little bit more, and that's because the amortization every single month when you make a payment, a little bit more goes towards principal and a little bit less goes towards interest. So if we run a comparison and we fast forward you 5 years into owning a home, what do the numbers look like? Well, that's what this chart does. So you'll see that after year one on a $300,000 home, at the end of year one, based on a 4% appreciation of real estate, which in DFW is super normal, it's actually conservative right now. But if your house appreciated 4% after year one on a $300,000 home, you would have earned $12,000 in appreciation, and you would have paid down about $5,200 into the principal portion of your payment. At the end of year two, the appreciation would have grown to $24,000, and the principal amount towards your loan balance would have grown to $10,781. All the way to this 5-year mark. So at the end of 5 years, your home appreciation would have appreciated to just shy of $65,000. So you bought the house for $300,000, it's appreciated to $364,996. That is crazy. That could pay off a lot of student loans for some of you. But then you also paid into about $28,000 down into your principal. So at the end of 5 years, check this out, $93,000 you would have after owning a home, whereas with rent, let's assume you had $1,600 a month in rent. After 5 years, how much do you have? Zero. You give $1,600 to your landlord or to the apartment complex and you get nothing in return. You would have spent $96,000 in rent and got nothing for it versus owning. So if the sooner you can own a home, the better. And guess what? We all know rent is not staying the same. Oftentimes, after each year, your rent increases. In fact, this is what rent has done since 2012 to now. So it's not even likely that the rent would stay at $1,600, which is what makes this even more crazy. Don't wait. Buy a home, even if you don't love it, buy the house, and then guess what? You can turn it into a rental, which you guys know I have a whole video series about, because you interview anybody in their 50s, 60s, 70s and ask them what their biggest regret is when it comes to real estate, and they'll tell you they should have kept their very first home and just rented it out, because the net worth on that house is not even, it'll make you want to vomit. So hope this was helpful. If you have any questions, just let me know. DeniseTheMortgageNerd.com. Bye-bye.